will create America's own sovereign wealth fund to invest in great national endeavors for the benefit of all of the American people. Why don't we have a wealth fund? Other countries have wealth funds. We have nothing.
In the final weeks leading up to the election, Donald Trump and Joe Biden found some common ground on at least one thing: the wisdom of creating some form of sovereign wealth fund for the United States. But that they've worked for some countries doesn't necessarily mean they'd worked for the world's largest economy.
So it's really interesting that in this really polarized environment that we're living, both Trump and Biden are thinking about possibly starting a national sovereign wealth fund in the United States.
The idea that we should somehow be systematically setting up some government authority to make broad investments in the economy of our country or the economy of other countries seems kind of crazy to me.
Over 80 countries around the world have sovereign wealth funds, state-owned funds that invest the country's cash reserves for the long-term good of its citizens and the economy. Globally, assets under management in all SWFs total $12.8 trillion, up more than tenfold over the last 2 decades.
We have invested in 9,000 companies around the world. We own 1.5% of all the equities in the world. In Europe, we own close to 3%. And then we own bonds and we own real estate.
That's Nicolai Tangen, the man in charge of Norway's sovereign wealth fund valued at roughly, get this, $1.7 trillion.
It's a big fund in a small country, right? And you have a lot of stakeholders, people who want to have a say in pretty much everything, right? And so you have to navigate this. I would say the ministry has been tremendously important in the success of the fund. I think we have great politicians in the country, but we need to navigate all these stakeholders, and that's a very, very interesting exercise.
At the end of 2023, Tangen's Government Pension Fund Global topped the list of such funds, followed by China's CIC and SAFE Investment Company, with 2 from the Middle East, Abu Dhabi's and Kuwait's, rounding out the world's top 5. It's no coincidence that so many of the countries with large sovereign wealth funds, like Norway, are rich in oil and other natural resources.
The usual context is when you have a country that is in surplus at the government and at the national level because of very large exports. Then you have all this huge fund, and often you can't invest it all at home, and so you want to go and invest it abroad.
Initially, the strategy was to invest mostly in equity, in real estate, so to invest definitely outside their natural resources, although they also invest in oil companies outside their countries.
Ruth Aguilera is a professor at Northeastern University who has studied the origins of sovereign wealth funds and how their mandates and strategies have evolved through the years.
Now they have become very sophisticated. They are investing in AI, data centers, and also a huge push towards green infrastructures and renewables. So that's another kind of like big asset class that they're investing in. So it has totally switched from investing more in, they definitely invest in all the publicly traded companies, but now the focus has switched towards what many investors are doing, AI and sustainable investment.
As the largest sovereign wealth fund, Tangen's NBIM in some ways sets the pace for others.
So Norway is the poster child of sovereign wealth funds, mostly because it's super transparent in their goals. So not only they have a council of ethics, which has existed for a long time, but in 2012 they decided that they would only invest in companies that they have good corporate governance.
You are the CEO of the largest sovereign wealth fund in the world. Where did it come from? Where did NBIM come from?
Well, it's very interesting. So in Norway, they found the oil in '69, and it was the last attempt. They were drilling the last well, and if they hadn't found oil then, they would just have needed to pack up the toys and go home. It was announced to the Norwegian people the day before Christmas Eve in '69. And in many countries, it had been a curse. It had crowded out industries, it had led to corruption and so on. And so the politicians in Norway decided to set up this fund. And it was set up in 96, started with 2 billion Norwegian kroner, and is now grown to 19,000 billion Norwegian kroner, or $1.7 trillion.
Along with its scope, its mission has also grown over its 26 years. I wonder if there's another function of a sovereign wealth fund. In fact, it's described in some of your materials online, which is sort of a almost wealth transfer from the current generation to the future generation. Is there a function for that even if you don't have a surplus?
Perhaps there are some philosophical reasons for doing that, but I do think you would need to have, it's basically to save and safeguard the wealth for the future. But I wouldn't borrow today in order to spend in the future. But if you have one of these windfall gains like we've had on the continental shelf, I think it makes a lot of sense.
You have a mandate, obviously, to maximize return, but also with an element of sustainability on various indicators: economic stability, climate, environment stability. Do those things come into tension with one another?
No, I don't think they do, because we believe that climate risk is a financial risk. And the reason for that is that if you have, we own 1.5% of all the equities in the world, and if we have one company polluting, well, it's being picked up by all the other companies we have. We need to care about, the future. We need to care about the climate. We see that a deteriorating climate is causing worse harvests, it's driving up prices. We see it now in coffee, olive oil, orange juice, and so on. And so it's basically a financial risk, and it hasn't been the case before, but it's increasingly the case.
Do you even take a look at some investments that might have an adverse effect on climate? For example, brown coal, as I understand it, you don't invest in any company involved in brown coal.
No, that's correct. And that's a separate entity from us. It's called the Council of Ethics, and they exclude things for ethical reasons. So there are a lot of different types of weapons we don't do. We don't do coal, we don't do tobacco, for instance.
How do you take into account changes in governments? In Norway, for example, to what extent does your investment strategy vary with who's in power?
We have a very constant investment philosophy. And I think that's really one of the success factors behind the fund, is that our investment mandate is widely anchored. So all the political parties agree on kind of the big guidelines, the main guidelines for the fund. It means that when we have a change of government, our investment philosophy does not change. It remains constant.
Given your emphasis on the environment, do you see a retrenchment in a lot of companies in their commitment?
Yes, there is retrenchment. There is a backlash against ESG and against climate. So it's moving slower than we would have hoped for and than we would have wished for. But I do think if you are really serious about your business, you are serious about your stakeholders, about your employees, you need to take these things seriously.
Essential to that philosophy is NBIM's focus on transparency in its holdings, weightings, and its market value.
If you go there, anybody goes there, they have a very, a building that's like all glass to represent their transparency. They are very open to, we have talked to them many times, and everything is publicly available. So that's, I think, very constructive. And I think they are an example for the rest of the funds on how to follow the Santiago Principles, how to invest responsibly, because that will lead in the long term to better financial returns.
The Santiago Principles are a set of 24 voluntary guidelines for sovereign wealth funds, created in 2008 by the IMF and a group of the largest funds in order to address concerns about risk-taking and governance. How do you compare with other sovereign wealth funds? I mean, there's one in Singapore, obviously there's one in UAE. How are you similar? How are you different?
Yeah, there are a lot of really fine sovereign wealth funds out there. I would say how we, the main differences, one, we are 100% transparent, right? We even have a live tracker on our website, showing the real value of the fund, and you know how often it's updated? What do you think? Well, 13 times a second. So that's really live value of the fund. And it's actually the most looked at number in the country, which is quite interesting. Then we are very long term. We are not in the private market. And then we also have, I think the fact that it is so broadly politically anchored is a bit different.
The fund's website tells us just how broadly anchored it is. 72% is in equities of those 9,000 companies, 26% in fixed income, and the rest is in real estate and renewable energy infrastructure. How do you look for alpha? When you go out there and look to beat returns, what sorts of indicia do you look at?
Well, we try to find great companies which outperform their peer group. Quality companies which can compound at higher rates, high return on capital with some moat, which means that these returns can be sustainable. So that's what we try to do.
How much of it is ground up, that is company by company, as opposed to certain sectors or certain styles?
The alpha we try to create is all company specific. We have delegated mandates. We have roughly 100 portfolio managers who have a specific portfolio, and they try to outperform the market on a daily basis. Now, we try to have a longer term time horizon in what we do. So typically we would measure results over a rolling 3-year period. And I think that's important in this market to be increasingly long term in your thinking.
You are, last time I checked, 70% in equities.
Yeah.
Does that vary, and who decides to vary it?
Well, it's the ministry who decides. Now it has been pretty constant for a long period of time. We increased the equity portion from 40 to 60% during the financial crisis. So actually during 2008, 2009, we were probably the biggest buyer of equities in the whole world. Now, in retrospect, that turned out to be a good thing.
Unlike some of its peers, none of the fund is invested in private equity. You didn't mention private equity or private credit. Why do you not invest in those?
Well, that's not in our mandate. So we only invest in listed equities. We have suggested that to the Parliament, that we should be allowed to go into private investments, but so far we cannot do it. There is a political process, and then we'll see where that will lead, because we do think we should have all the tools in the toolbox, but for the moment we haven't.
Even without all the tools in the toolbox, few would argue that Norway's sovereign wealth fund has been anything but a success for the country. But Professor Aguilera says that's not always the case around the world.
Other funds have not worked so well. One of them is the 1MDB from Malaysia. The other one is the one from Libya, and I would attribute to that mostly to poor corporate governance. They have the politicians in there, the fund is captured by the politicians, they don't have transparency.